be upstanding as we allow the governor and his entourage to enter the auditorium. May we remain upstanding for the national anthem. I will invite our Events and Hospitality Officer, Ms. Beauty Undipiri, to give us a prayer before we start the session.
Shall we bow down in prayer? Father, thank you for every seat that has been filled here today, for each and every heart that feels the presence in this room. We thank you. You are truly what we are setting out to accomplish today. We have an idea, a vision, hints and daily instructions. We have talents, abilities, and time to work. However, only you can see in perfect detail the end of every beginning, every project, every season, every life. Nothing is ever in vain, for even mistakes and missteps are used for good. We pray, Jehovah God, thanking you, because even in the book of Psalms chapter 1, verse 3, you say that you are our shield. May you shield us today, Jehovah God, that even the pronouncements are made to the good of this nation. We pray that, Jehovah God, you shall be our guide and our strength. In the name of Jesus Christ, we pray. Amen.
Thank you very much, Beauty. We may be seated. Governor, Deputy Governors, members of the Monetary Policy Committee, members of the press, ladies and gentlemen, good morning. Welcome to our first Monetary Policy Media Briefing for the year. As you may be aware, the Monetary Policy Committee has been holding its meetings over the last 2 days, February 15 to 16, 2021, and today we will hear the decision of the committee. Allow me to acknowledge the presence of our online audience who are following this event through various channels. We are live on ZNBC TV1, on the Bank of Zambia Facebook page, as well as the ZNBC Facebook page. To those that are following us through our social media platforms, we appreciate your presence. This morning, the Bank of Zambia Governor, Mr. Christopher Mvunga, will be announcing the decision of the Monetary Policy Committee. He is accompanied by his 2 deputies, Deputy Governor in charge of operations, Dr. Francis Chipimo on his right, Deputy Governor in charge of administration, Mrs. Reka Mohango on his left. In our midst, we also have members of the Monetary Policy Committee. I will be your master of ceremony this morning. My name is Besnat Mwanza, Assistant Director in charge of communications. Without wasting much of your time, I will now invite the Governor to address the press. Governor, sir.
Thank you very much, Besnat. Good morning, ladies and gentlemen. May I thank you for finding time to join us at this important press briefing, which I'm sure the country is very expectant given the dynamics that are happening in the economy. I think let me say from onset, before I get into the formal speech, I'm sure we're all aware of the challenges that the country is facing, not just in Zambia, globally, compounded by the effects of COVID. We're now in uncertain times where we've got the second wave of COVID. We've got challenges within the economy, ranging from inflation that's spiraling. And actually, I should explain upfront that as we sat as a Monetary Policy Committee, this is a very complex and delicate matter, because what we're seeing is that the inflation is not being pushed. It's not an aggregate demand push. The inflation is actually rising from a cost push, principally arising mainly from the exchange rate depreciation and the food price inflation. So we were mindful as the Monetary Policy Committee to say, as a country, given the constraints that have been brought upon us by COVID or compounded by COVID, how do we navigate the country going forward? There's an issue, a dire need to ensure that the economy of the country starts growing, but at the same time, the bank has got its mandate to ensure that there's price stability in the country. So it's a delicate act of balancing the two. Should we lose sight of inflation and focus on growth? Should we focus on inflation and lose growth? So as you can imagine, it's been a difficult and complex discussions that we've had as Monetary Policy Committee, which have taken us into 2 late nights. And I wish to thank the members of the Monetary Policy Committee for their effort and time. I will now go straight into the official briefing, having given you the background. May I recognize the presence of the Deputy Governor Operations, Dr. Francis Chipimo, Deputy Governor Administration, Mrs. Reka Mhango, directors and members of the Monetary Policy Committee present, Bank of Zambia colleagues, members of the press, ladies and gentlemen. Let me welcome you all to the first media briefing of 2021, at which I will share with you the decision of the Monetary Policy Committee, MPC, following its meetings on February 15 and 16, 2021. I will also begin by informing you about the decision of the MPC, which is a slight deviation from the last time. We will give you the decision up front and explain the reasons why we've arrived at that decision. The decision of the MP will be followed by the review of the MPC decision made at the meeting held in November 2020. I will then proceed to review economic developments in the fourth quarter of 2020 and outlook for inflation and growth over the next 2 years, after which I'll give you the concluding remarks. Decision. Having deliberated and with the background that I gave you, ladies and gentlemen, the MPC decided to raise the policy rate by 50 basis points from 8.5% from 8%. So the decision we've arrived at is to raise the interest rates by 50 basis points. What that means in plain language is that we've raised the interest rate by 0.5%. So 50 basis points translates to 0.5%. In arriving at this decision, the committee took into account rising inflationary pressures, with inflation projected to deviate further away from the target over the next 8 quarters. This decision was taken while being mindful of the weak economic environment, as I already explained, and the fragilities in the financial sector. The decision is primarily aimed at anchoring inflation expectations, which is critical in restoring macroeconomic stability. In restoring macroeconomic stability, should inflation persist above the upper bound of 6 to 8% target range, the Bank of Zambia stands ready to further tighten monetary policy going forward, meaning we will monitor the events post this implementation of the new rate, the 50% basis points, and should conditions not change, we are inclined to relook at tightening further. So what I'm signaling is we are concerned about the inflationary pressures, we are concerned about where inflation is going, And as I said, we're also mindful of the need for economic recovery. Let me now take you to review of the last monetary policy decision. At the November 2020 meeting, the MPC decided to leave the policy rate at 8%. That decision was informed by the imbalances in the economy, reflected in contraction in growth and weaknesses in the financial sector. This was despite rising inflationary pressures, uncertainty surrounding the persistence of the COVID-19 pandemic and its adverse effects on the people's lives and livelihoods also played a role in the November 2020 MPC decision. Since that decision, market interest rates continued on a downward trend, which is a positive, in line with accommodative monetary policy stance. However, growth in credit to the private sector slowed down, partly due to strict lending conditions by banks in the face of rising credit default risks. Lending to government, however, continues to be on the high. What are the recent developments and outlook? Let me turn to the global economy. As anticipated, the global economy contracted in 2020 on the back of lockdown measures to contain the COVID-19 pandemic. The lockdown measures caused severe disruptions to global supply chains and resulted in a slump in consumption and investment spending. Consequently, the global real GDP is estimated to have shrunk by 3.5%. However, a strong rebound to 5.5% in 2021 is projected. This recovery is premised on policy support and the gradual easing of restrictive measures owing to the anticipated widespread COVID-19 vaccination. In the medium term, growth is projected to be uneven and highly uncertain, contingent on the extent of the economic damages, effectiveness of policy support, and severity of the current health shock, which has been brought about by COVID. Let me now turn to our domestic economy and the activities within our economy, which is the Zambian economy. Ladies and gentlemen, high-frequency indicators of domestic economic activity point to a less severe contraction in real GDP growth in the last half of 2020 following the partial relaxation of COVID-19 restrictions. Nearly all the monitored indicators in the Bank of Zambia survey of business opinions and expectations improved over the third quarter readings. In addition, Stanbic Bank Zambia Purchasing Managers Index also signaled a softer deterioration in the private sector business environment. In 2021 and the medium term, domestic real GDP is projected to recover, supported by positive growth in mining, electricity, gas and water, and the ICT industry. However, uncertainty surrounding the resurgence of COVID-19 infections and the narrow fiscal space pose significant downside risks to the growth outlook. This is consistent with a weaker January 2021 Stanbic Zambia Purchasing Managers Index results. Let me turn to the issue of inflation. I think this has been very topical and everyone is getting concerned about where is it going and how are we going to address this issue. And obviously the central bank, being a custodian of price stability, it is an indicator which is of concern to the bank given where we are currently. Ladies and gentlemen, annual overall inflation accelerated to a 4-year high in the fourth quarter of 2020. This was largely driven by the sustained depreciation of the kwacha, albeit at a slower pace, reduced seasonal supply of some of the vegetables and the fish ban. And this is what I was explaining initially, that as you can see, this is a cost-push inflation and not an inflation that's being driven by aggregate demand. Inflation rose to a quarterly average of 17.6% from 15.7% in the preceding quarter. Food inflation averaged 17.2%, up from 15.2%, while non-food inflation rose to 18% from 16.2%. Inflation increased further to a worrying level of 21.5% in January 2021 from 19.2% in December 2020. Over the next 8 quarters, inflation is projected to deviate further away from the upper bound of the target range of 6 to 8% that has been set by the bank due to the lagged pass-through effects from the depreciation of the kwacha and the sustained high fiscal deficits. The risks to inflation outlook are assessed to be tilted to the upside. Inflation is bound to accelerate further if crude oil prices increases persist. Fiscal deficits turn out to be higher than projected, and the exchange rate depreciates further. Inflation may be moderated, however, by improved supply of food and subdued aggregate demand, as economic growth is likely to remain modest. Let me go to the Bank of Zambia overnight interbank rate. The overnight interbank rate declined further to a quarterly average of 8.06% in the fourth quarter of 2020 from 8.57% and was contained within the policy rate corridor of 7 to 9% throughout the period. We move on to government securities market. This is the treasury bills and the government bonds. Ladies and gentlemen, demand for government securities weakened as investor appetite reduced. Both treasury bills and government bond auctions were undersubscribed, with the bid amounts falling short of amounts on offer by 20% and 70% respectively. However, funds raised from the auctions were adequate to cover maturities, resulting in a marginal surplus of 300 million kwacha. Additional securities were issued through private placements, mostly to finance the Farmer Input Support Program FISIP and to partially clear fuel arrears to suppliers. Consequently, the stock of government securities rose by 9.7% to 130 billion kwacha. At end December 2020, government securities held by non-residents increased by 30.9% to 18.4 billion kwacha, representing a 14.1% of the total value of securities. That's a very critical indicator. It's 14% of the total value of the securities, because this question tends to pop up now and again. 93% of these holdings were in government bonds. Interest rates. Ladies and gentlemen, market interest rates continue to trend downwards, influenced largely by the accommodative monetary policy stance that the bank has taken. The commercial bank's average lending rate declined to 25.1% in December from 25.7% in September. The savings rate for 180-day deposits also reduced to 9.8% from 10.3% similarly. The composite yield rate on the treasury bills declined to 21.2% from 22.7%. So it could be marginal, but there is a downward trend in terms of where the interest rates are heading to. The composite government bond yield rate, however, rose to 32.9% from 32.3%, reflecting weaker demand for longer dated instruments. Domestic credit market and money supply. Credit to the private sector moderated to 8.5% in December year-on-year from 13.8% in September due to strict lending conditions as banks sought to curb elevated credit default risk. And I think I did touch on this initially, that as the economic activities are slowing down and businesses are getting hit, their balance sheets tend to get weaker, which then makes it less attractive for commercial banks to lend because the risk is elevated. However, credit to government continued to grow at a strong pace, underpinned by issuance of government securities, particularly for procurement of agriculture inputs under the FISIP and clearance of fuel arrears to suppliers. This continued to contribute to the sustained strong annual growth in money supply, which is referred to as M3, at 46.4% in December 2020. Let me turn to the fiscal performance. Fiscal pressures remained high as revenues fell due to COVID-19 shock amidst rising expenditures, especially on agriculture inputs, health sector, as you can imagine, to respond to the pandemic to save lives, and clearance of government arrears. Fiscal consolidation remains challenging given the significant uncertainty about the evolution of escalating COVID-19 infections and the debt restructuring process, which is currently in progress. Narrowing the fiscal deficit by ramping up revenue whilst rationalizing expenditure and restructuring of government debt remains critical in restoring fiscal fitness and macroeconomic stability. Securing external sector support will be central to this effort. Ladies and gentlemen, let me turn to the current account. Preliminary data indicates that the current account surplus was sustained in the fourth quarter, supported by strong balance of goods performance. The current account surplus, however, narrowed to 600 million kwacha, which was 3.3% of GDP, from 600 billion kwacha, I beg your pardon, this is 600 million kwacha, which is 3% of GDP, from 700 million kwacha, which was 3.7% of GDP in the third quarter. This was largely explained by the widening of the primary income account deficit due to the payout of earnings to non-resident shareholders, particularly in the mining sector. The balance on goods surplus edged higher by 5.2% to 1.1 billion as the growth in exports outpaced imports. Exports rose by 2.7% to 2.4 billion, supported by copper export earnings that rose on account of higher average realized prices and volumes. I'll just pause here. I think one of the questions that you probably want to ask me is, so if the exports are high and why is the exchange rate suffering? I think just to preempt that question, if you look at the way the mining industry operates, whilst we capture the exports on the balance of payment account, it doesn't necessarily mean that the money, the copper is sold in dollars. The mining companies have got accounts offshore, so it doesn't necessarily translate into that money physically coming back into the country. They do transfer money back into the country on a need basis as the expenditure demands emerge. So you won't have a direct correlation which says because we made X amount of money, it means that money automatically came back into the country and it impacted the exchange rate. I just thought I should explain that because I'm sure you raise it when we come to question time. However, earnings from non-traditional exports, gold and cobalt, declined. Merchandise imports rose by 0.5% to $1.4 billion, following an increase in consumer and capital goods, which more than offset reductions in raw materials and intermediate goods. Let me turn to the foreign exchange market, which is again a source of concern as I picked up through the commentaries that are taking place in the market. Ladies and gentlemen, rising excess demand continued to characterize the foreign exchange market due to high import requirements for petroleum products and agriculture inputs under FISIP. I should also mention at this point that the imbalance in the foreign exchange market is a supply issue because the supply, given the subdued global economy, which has resulted in a decline even in foreign direct investments, what's happening is that the inflows have declined whilst the demand has remained marginally high. And why is the demand remaining marginally high? We have to respond to issues of health, like COVID imports by the Ministry of Health, which were not there until this issue made. So you will have that imbalance between the supply side and the demand side. Consequently, the kwacha weakened against the US dollar by 9.4% to an average of 20.71 to the US dollar in the fourth quarter, compared with 3.3% depreciation in the third quarter. In response, the Bank of Zambia scaled up interventions to moderate pressure on the exchange rate. And some of the measures we undertook is that we sold $340 million into the market, compared to $148 million in the third quarter on a net basis. This included receipts of all statutory obligations by the mining companies, which you may be aware that are paid directly in dollars to government. Gross international reserves. Gross international reserves declined by $117 million to 1.2 billion, equivalent to 2.4 months of import cover. At end December 2020, from 1.3 billion at end September, equivalent to 2.3 months import cover. The decline was largely on account of foreign exchange interventions and debt service, which Bank of Zambia had to undertake. I've just mentioned to you that we actually sold into the market $340 million in the last quarter, compared to $148 million in the previous quarter. So that's why you're seeing that decline. That's partially why the decline is being explained. I should also hasten to say that we are quite optimistic that with the bouncing back of the copper prices, we should have some respite in terms of how much forex will be coming in. Let me conclude by just summarizing what I've been talking to. In conclusion, inflationary pressures have been building over the past 1 year, with inflation remaining in double digits throughout the period. This period coincided with a significant contraction in growth, that's economic growth, following the outbreak of the COVID pandemic. So you can see the challenge we face with. We've got a contraction that's arising from COVID, which is causing the economy to contract, and hence the reason, on the other hand, you've got inflationary pressures that are coming through from the cost push factors. Given the weak economic fundamentals, particularly the contraction in growth in 2020, and the accommodative monetary policy stance that was pursued to support economic activity and moderate risks to the financial stability market, we started 2021 with growth showing stability, some signs of recovery, although remaining weak, while inflation accelerated further away from the target range. Ladies and gentlemen, under such circumstances, monetary policy needs to be carefully balanced between price stability, which is the key mandate of the central bank, and supporting financial system stability and economic growth. And that's a delicate balance I was talking about, that you can't ignore one minus the other. So the MPC had to go through these items in detail and say, how do we get the balance right between inflation, economic growth, in order to restore the country on a stable macroeconomic path. In the Bank of Zambia's view, controlling inflation at this stage is of paramount importance to help restore macroeconomic stability. And this has been one of the cornerstones why we've arrived at the decision of increasing the monetary policy rate by 50 basis points. The current challenges notwithstanding, we as a country must rise to face the difficulties that we are facing collectively. We believe, as a central bank, that there is a clear, albeit difficult path to economic recovery and growth. This path requires effective implementation of measures contained in the government's recently launched economic recovery program. In this regard, mobilizing external support and the successful restructuring of our external debt are critical components in achieving fiscal sustainability. Re-establishing macroeconomic stability and reinvigorating sustainable growth with concerted and collective action Zambia will and can come out of the COVID-induced crisis a stronger and more resilient economy. The key here is that it's got to be done collectively. Private sector plays a major role, government plays a major role, so we need to move as one team, as a country, if we're going to restore our economy on the positive trajectory. May I also mention that all decisions on the policy rate will continue to be guided by inflation focus, outcomes, and identified risks, including those associated with financial sector stability. I thank you all, and I open the floor for questions.
Thank you very much, Governor. So there we have it, monetary policy rate adjusted upwards by 50 basis points to 8.5% from 8%. And this was necessitated by an increase in inflationary pressures, which are pushing inflation further from the target range, among other reasons. At this point, we'll go into the question and answer session. Let me state, colleagues, that let's restrict ourselves to monetary policy issues. We will take questions from 3 people at a time, and those that want to ask questions may walk to the microphone that has been set for this session. Please state your name, state the institution you represent before you ask your question. We can start.
Good morning, Governor. My name is Chris Mvunga, I write for Reuters News Agency. You emphasize the importance of getting external support and restructuring our debt. I just wanted to find out, how are the talks with the IMF going, and what are the chances of getting a bailout package?
Thank you so much. Good afternoon, don't know if it's still morning. My name is Esnat Lungu, reporter for Spring 24 TV. My question is, Governor, you have increased the policy rate. Now, you as a Bank of Zambia, I can say, are stuck between a rock and a hard place, because obviously increasing this rate would mean less liquidity on the market for the country, and then reducing the rate would mean inflationary pressures. We have seen the cost of living has increased, commodity prices are increasing. Now, with this decision, how is this going to play out on the market? And is there anything else that you're doing to get yourselves as a Bank of Zambia or the economy out of this situation? Thank you.
We can get one more before Governor comes in to respond.
Good morning, Governor. My name is Hope Nsonda from Mane FM Business Radio. I would like to find out the bank's position on the Bitcoin currency as well as the cryptocurrency. And the other question is, I'd like to get the update on the gold buying following the agreements that were signed with the 2 mining firms. Thank you.
Thank you very much. Let me start with my namesake, Chris. Chris, yes, as you may be aware, we've started discussions with the IMF, virtual discussions, which commenced on the 11th of February, and these discussions are ongoing. This is really under the Extended Credit Facility Program, which will go on until the 3rd of March 2021. So we are having cordial discussions with them. They are ongoing. I said at this point, as you can imagine, we started on the 11th, as I'm saying. It would be premature to make any pronouncements. All I can say is that the discussions are going on cordially, and at an opportune time, an announcement will be made once all these discussions have been concluded. SNAT, your question is very important, because I think that's what I was trying to explain at inception before I started this, reading my statement. So SNAT, what's happening is that you are caught in an environment where inflation is running off, and the more liquidity you add into the market, you can actually make the situation worse. And at the same time, the bank is very clear and very alive to the fact that the economy has been contracting, and that's what I was saying. So you need to get this balance right between, do we focus on economic growth and recovery and leave inflation on its own, or do we try and get to a balance? So the Monetary Policy Committee has looked at all these things, and what we felt is that there are enough instruments That will safeguard against the high cost of borrowing, because your direct translation is the 50 basis points will be transmitted into the credit system. You will realize that we've still got facilities like the targeted midterm refinancing facility, the 10 billion, of which we've disbursed now close to 4.2 billion, and we've disbursed 4.1 billion from the last time that we spoke. I think the last time we spoke when we were at the meeting, it was around 2.8. So there is a significant uptake getting on from there. You also realize that on this facility, it's ring-fenced in terms of pricing. So all the disbursements that have happened in the past will not reprice themselves. They'll still be kept at 8%. Only the new disbursements will go at 8.5. Now, if you look at the market and the rates I've been quoting in my speech, you realize that that's a concessional rate, because we're talking about 25% and we're talking about lending at. So we're quite confident that some of the instruments that we already have in place will mitigate the rise of the 50% basis points in terms of staving off credit from the market. And hopefully we can get the balance right between managing economic growth and managing inflation. So really that's where we are with that. From a liquidity point of view, our assessment is that there shouldn't be a severe, yes, there will be an impact, but it shouldn't be significant. It shouldn't be pervasive to extent where it will stifle the economy. So we've done those stress tests and analysis, and we're fairly comfortable that there will be sufficient liquidity, even with a 50% basis points increment. Hope Musonda, Bitcoin, and I'll ask one of my directors in charge of banking and payments. Lazarus, where are you to talk about the Bitcoins and we'll talk about the gold, but let me just ask Lazarus to talk to you about Bitcoin and...
Thank you, Governor. I think the question of Bitcoins, as a bank, I think sometime in 2017 we did issue a cautionary statement to say, as it stands, the Bitcoin is legal tender in the Zambian market, and that people should be careful when they're dealing in some of these cryptocurrencies. For you to deal in such kind of currencies, you have to understand the risks so that you are not cheated out of your hard-earned kwacha. So as it stands, it's not legal tender in the Zambian market. We are still doing a lot of research, and a lot of central banks are carrying out research to see how they are able to trade in such kind of currencies. Thank you.
Now, your next question was on the issue of gold purchases, isn't it? The current scenario is that we've bought 47 kilograms of Dog gold from Zambia Gold Company Limited, which we have. We are also, let me just give you the numbers, we're also looking at, in terms of purchasing from Kansanshi Copper Mines, our estimate is that we'll purchase 25,200 ounces of London Good Delivery Gold from Kansanshi Mine PLC this year. At the same time, our projections are that we'll purchase 21,000 ounces of Dog Gold with a minimum of 88% purity from the Zambia Gold Company. So I think the answer here is that we've just kicked off this process. We'll ramp it up as we go along, and at some point it will become a critical or a significant component of our reserve, of our international reserves. So the program is ongoing, and we're not abandoning it. And it's critical for the bank to hold gold. I'll ask Deputy Governor Operations, because he's running with this, to just comment further if...
Thank you, Governor. Well, really it was just to confirm that indeed we have commenced the purchase of gold. We should be making our first purchases from Kansanshi, as I think we announced before. We had made the purchases from ZCTM-IH last year, the first purchases. And so I think this month we should be concluding the first purchases this year from both companies. I think we're trying to purchase something like 21 kgs from ZCTM-IH, and the numbers for Kansanshi are what the Governor has announced. Thank you.
Rebecca, do you want to add?
No, Governor, I think that that has been clarified in terms of our estimated purchases of the gold.
Thank you. Do we have any more questions? Please come down to the podium.
Good morning, Governor.
Morning.
Taonga from Bloomberg.
Sorry, name again?
Taonga.
Taonga.
Yes.
All right.
Now, the kwacha has been on a continuous depreciation trajectory. I just wanted to know the main reason why this has been, especially, I would say, from the start of the year, and when do we expect it to stabilize?
That's a currency, kwacha. All right.
Another question?
Good morning.
Good morning.
I'm Comrade Derek Sinjera from the Rainbow newspapers. Before this announcement, there was a concern that either raising the policy rate upwards or would worsen the situation on the market, but thankfully you have just raised it by a small notch. There's also this issue of, although you touched on it, what is actually delaying the Bank of Zambia from stimulating liquidity on the market? Because goods and services are not moving because there is no purchasing power among our citizens. So why is the Bank of Zambia not aggressively releasing money on the market, the stimulus package that the president spoke to or instructed you to release to the market? I don't know what's the progress. Then secondly, on debt sustainability, what confidence are you going to give us that you really are, because there is an argument that focus on projects like infrastructure development are contributing to debt and sustainability, because Zambia is incurring a lot of debt through construction of roads, construction of bridges, etc. So what advice are you giving to the Zambian government in terms of trying to slow down? I know that this is an election year and the people would want to be seen to be working. So what balancing act, or are you going to put your head on the chopping board by telling the government to reduce on investment in infrastructure?
Thank you very much. Is there anyone before Governor comes in? Governor, you may take the question.
All right, let me start with Taonga's question. If I got you right, Taonga, what you want to know is the depreciation of the kwacha, when does it come to stop? I think you're fully alive that we run a liberal exchange system, which is basically dictated to by the rules of supply and demand. So as to when this depreciation will change, it's when there's a structural issue here. It's a question of how much are you exporting and how much are you importing. Now you need to get the two sides into equilibrium in order to create the balance in the market on the supply side and demand side. For as long as you're import dependent, you're net importer, you will have this challenge of how to manage the currency, because your demand is always marginally or higher than your supply side. So these are structural issues which I think have been addressed in the economic recovery plan in terms of industrialization. We need to export more. Even from a debt point of view, I think the Minister of Finance has articulated this both in Parliament and to the media, that there is a debt restructuring exercise which they're engaging the creditors. And all these measures, unfortunately, there's no silver bullet. You don't have one answer to say, if we do this, this is what. It's multiple actions that will assist us in stabilizing the currency. And at the end of the day, what dictates the currency's price is your productivity. So if a country is more productive, the country is exporting more, and the imports, if you become a net exporter, your currency will strengthen. If you become a net importer, you will have challenges with dealing with the currency. So those are the things we're grappling with in terms of, and that's what I was saying in my speech, that this requires collective effort, both from the private sector and government. We need to start exporting more. And in addition to that, we've also got these free trade area agreements which we've signed, which should signal to the domestic players that let's go into manufacturing, let's go into value additions so we can start exporting more as a country and end up a net exporter as opposed to a net importer. That's what's going to help us in terms of where this currency, how do we manage the currency and how do we defend the currency. Derek, you talked about, can I ask, I'll ask Deputy Governor Operations to talk through your issues of the liquidity. I think we've addressed these before in terms of the instruments that we've put in the market before. In the last MPC, we did indicate the 350 basis points decline on monetary policy rate to allow for liquidity in the market. I've just updated you on the targeted medium-term refinancing, the 10 billion, of which I said 4.1 billion has been disbursed, 7 billion has been approved. So these disbursements, but I'll let Deputy Governor talk through the detail.
Thank you, Governor. I think first on just Taonga's point, just to reiterate, Governor, I think this is a question which keeps coming up. And in the end, the answer is the same. I think, Governor, in your presentation, you clearly outlined, the issues we need to do on boosting exports, whether it's enhancing mining, boosting the non-traditional export sector. We've seen, if you look at the current government's economic recovery plan, those issues are also stressed. And in terms of addressing the COVID challenge, we also saw that, in fact, there were teams which were set up, I think, Governor, maybe even before you came to the bank, to look at how do you deal with import substitution? How do you get our manufacturers supplying our big retail chains? I think COVID has just accentuated the need for us to move on these areas. So, at a certain level, there's no big surprise about what we need to do. It's been outlined, and I think the big issue is just how do we execute? On the specific issue on what support do we give, indeed, Governor, we've been providing quite a bit of support through last year. I mean, it began with the reduction in the policy rate, as you said, 350 basis points throughout the year. But we had also conducted a secondary market bond purchase program where we were able to give liquidity to the banking sector to the tune of 8 billion. We had a targeted medium-term facility, and as you've indicated, we're now around 4.1 dispersed. I think over the next couple of weeks, we have an additional 1 or 1.5 billion, I think, which would likely be dispersed, which is because once we conclude the application approvals, there are also just 1 or 2 things which the banks have to do. So we are also seeing that increasing in terms of the drawdown of that amount. And then what you don't see, obviously, so visibly, is that within the banking sector, I think we're given that commitment that if banks faced any challenge in terms of liquidity, we stood ready to help them. And we do that through our normal operations, such as the open market operations, which Director Mvunga here, as Director of Financial Markets, manages on a day-to-day basis with the banks. So all of those things are measures and efforts which we are making to make sure that we can get money to the market. But of course, we don't lend directly to individuals. So we need a partnership. We need the financial institutions to also then do that last leg, if you like. And of course, there's also support which is given through fiscal more directly. But typically that was not in the nature of borrowing. What is appropriate there is to provide support to people. So I think that's where I'm at.
All right, there was also a question of debt sustainability, which you said, are we putting our heads on the chopping block? We work as partners, so we don't put our heads on the chopping block. We support each other to avoid putting the heads on the chopping block. So on the fiscal side, I think you've, again, the Minister of Finance has made numerous announcements of where they're not contracting any further debt for projects. That's my understanding. And that some of the projects have been rescoped, some of the projects have been postponed, some of the projects have been cancelled. That's my understanding. And the ministry can give you a detailed list of where they are. But certainly from where we sit, our understanding is that is that actions have been taken to scale down and reduce the exposure, the debt exposure of the country, if not stop it for now. So there is work that's happening in that regard. The debt suspension under the G20, that's another initiative that the minister is navigating through. All these things that we're also talking to the IMF about, et cetera, the whole purpose at the end of the day is to abate or improve our debt sustainability going forward. So there's a lot of initiative. There are no deliberate policies from government. I have not heard pronouncements myself of huge projects that have been brought on board for whatever reason. So we take it that, and as I said, the Minister of Finance can give you a detailed update of which projects they've scaled down. Our understanding is that there has been scaling down. Our understanding, and if I look at the disclosure of the debt portfolio, it's not moving upwards, other than probably from existing disbursements. So my reading of that is that the matter is being addressed.
Thank you, Governor, for that. We have a question from our online audience. And they are saying, what does the increase in the monetary policy rate mean? What impact are you expecting on the exchange rate with the increase from 8% to 8.5%?
Now, I think this is what I said at the beginning, that you've got to be very careful to get the balance right between stimulating economic growth and price stability, which consequently filters through to your financial system stability. What the increase means in a nutshell is that your cost of borrowing will go up by 50 basis points, because there will be a pass-through effect that the banks will take into account. However, our analysis is such that we feel that there's sufficient instruments in the market to mitigate the negativity that it will starve off the market from accessing liquidity. And that's why we're talking about these instruments like the targeted medium-term refinancing, which is still drawing down. And it's drawing down at very affordable rates. So all the applications which we've approved before today are at 8%, which means ultimately the cost of funds to the people that are borrowing or the businesses that are borrowing is probably getting to around 12-13%, which is far below what the market rates are, and that's because the bank has provided a stimulus package. So we believe that the businesses are insulated to a certain extent. Even at 8.5%, we believe that the cost of funds from the disbursed portion, we've said we've approved about 7.9 billion, which is imminent for disbursements. Some Deputy Governor mentioned that we should be disbursing another 1.5 billion. The cost at which this money is being lent out is far less than where the market is sitting. So our view is, whilst the 50 basis points has gone out, it shouldn't constrain access to credit under the concession or stimulus loans or facilities that we've put in place. There will be an impact, yes, but we don't think it will be that significant to slow down the economic development, the economic growth. And that's the balance I was talking about, that we had to make a very calculated decision to ensure that we don't constrain economic growth, but at the same time that we don't allow inflation to spiral out of control. So it's a delicate balance between which is which. So I guess that's really what the crux of the matter are.
Thank you, Governor. So maybe just to add that I think the other point which you mentioned is that for us, of course, the rise in the policy rate, because you're balancing, you are not moving in a very, very big way. But in the statement, Governor, you did also indicate that if we continue to see the current trends of escalating inflation and so on continue, we would have to move much more strongly than we currently have. So the real key is that we're just trying to signal really to the market and the players that there are some aspects of the movement in inflation which are a concern and which require us to then rebalance our posture, if you like, on how we address these things. And then coming back to the exchange rate, as we said, this is a factor of many things. We're looking at the exports, we're looking at import substitution and so on. So it's not going to be simply solved with the bullet of an interest rate rise. I think the bank has demonstrated in the past that when we had really extreme volatility, Of course, we had to take very drastic measures, but those measures had their costs, and we are always just mindful of that. Thank you.
And in a nutshell, this is a rebalancing exercise. So it's a very complex exercise in terms of we need to address these potential risks. We cannot ignore them, and that's why we've arrived at this decision. We can't let inflation run away. Neither can we stifle economic growth. So we had to get into the middle of the road of saying, how do we have some form of control on both sides without necessarily destroying the economy?
So we can take the last round, if there are any. I see none. So since there are no further questions, let me take this opportunity to thank the ZNBC crew for the production, Blockhouse, Media House, for assisting us. At this point, members of the press, let me take this opportunity to thank you also for taking your time to join us this morning. May I request that we remain seated as we allow for the governor and his entourage to leave the auditorium.